Hello friends, it's Jordan from Credit Matters, and today I want to address the myth that credit cards are evil. If this is the first time you're joining us, Credit Matters is a resource designed to inspire and inform Canadians to demystify the credit game and help you succeed on your own terms. This is content that is designed by Canadians for Canadians. If you feel like taking charge of your financial future and getting in the know about credit and how it can really help you with your future, please subscribe, hit the thumbs up button. It really helps us out. Today we're going to address the question, are credit cards evil? Short answer, of course they're not evil. But why is this a question at all? I know many of us were brought up to believe that credit cards they're bad, they're evil, they're for people who are weak, they're for people who are undisciplined, and all that they can do is get people into trouble. You shouldn't have a credit card because you shouldn't be spending money you don't have, and if you can't afford it, you shouldn't be buying it, and so on. Well, all of those things, some of those things are true. The rest of those things, frankly, are based in ignorance and fear. A lot of that language, if you're hearing your parents say those kinds of things, that's not surprising. I know there's a lot of stories out there of some of us, for those of you like me who are millennials, who are say in your late 20s or early 30s, whose parents came to Canada with $40 to their name and hard work got them through, and they would never think of using credit cards. And still to this day, they're kind of still trying to pass on that same mindset to you. Well, that's understandable. Some of those stories might be inspiring. Those stories might be part of your lineage and actually true when it comes to your family and your parents or your grandparents. But the important part here is that you're an adult, it's 2019, and this is your life, and it's your financial future. So the reality about credit cards is it's not different than money. It's not different than alcohol. It's not different than cigarettes. All of these things in the hands of people who don't know how to handle them can be detrimental. They can get people into a lot of trouble. And no doubt there are a lot of people with a lot of debt out there. And there's lots of stats about, especially when it comes to Canadians, especially young people and students, and how much debt people are carrying. It's important to know, however, that credit cards are tools. They are tools to help you build your financial future. Let's use the example of, let's say you have a credit card with a $1,000 limit from BMO. There's a very simple thing that happens that can help you build your financial future. They give you a credit card with a $1,000 limit. In the month of June, you go out, you spend $100, you pay $100 onto your card by the end of the month, you get your bill, it says you owe $0. After your billing period closes, BMO will report to the credit agencies, Equifax and TransUnion. They will report that you were able to spend some money, but you paid it off in full. So your credit utilization is actually 0%. Not only does the fact that you have this credit account open, because the goal is to actually have more than 10 credit accounts open. You're thinking, more than 10 credit accounts? I thought the idea was to have 1 or 2. Well, I don't have any credit cards. Well, I only have 1. Well, my parents only have 1 credit card. So what are they going to think if I had 10 credit cards? Once again, it's 2019. This is your life and your future. Getting informed is really the key to your financial success. So the goal is to actually have many credit cards. Not just so many credit cards, but you want to have many credit cards that are in good standing with balances that are at 0 while still being active. That's actually the goal here. So the fact that you were able to pay your $100 balance down to 0, it reports your utilization as 0. The goal is to be at 0. That is to say, when it comes to how the creditors and banks and lenders view you, they want to see that you owe basically nothing to to the people who have extended you credit. So if you have several credit cards and your balances are all very low, that looks fantastic. It gives additional lenders, it gives people who know nothing actually about you, it gives them reason to want to actually lend to you. They're like, this person's going to be able to pay their bills. I can see they have a track record of paying their bills. That brings me from credit utilization to the second piece, which is the on-time payments. When you get your statement at the end of the billing period, and it says, please pay $33 of your balance, please pay $13, whatever the amount is, that is the minimum payment. That is the absolute minimum payment that you should be making. And we'll talk in other videos about really how to handle those sorts of things and really how to grow and increase your credit score. But you must pay that minimum payment. So let's say you had $100 outstanding, the minimum payment was $13, but you paid it all off. Fantastic. So then the fact that you made an on-time payment is then reported also to the credit bureau. So now the credit bureaus are beginning to see over time, they've been able to keep their utilization low, if not under 10%, which is the gold standard, 10% or lower, if not 1 or 2% or 0 at best. They're also seeing that you were able to make an on-time payment. So if you only have one credit card, and of course, most of us are like, I have one credit card, my parents have one credit card, that's the way I should go. Well, that's going to only serve you for so long. Even if you are pristine and your credit report is immaculate with that one credit card, that's only going to take you so far. Because having only one credit card, especially as you move through your 20s and get into your 30s and beyond, having only one card shows to potential lenders that you are not capable of handling multiple credit accounts. So when the time comes for you to go and get a car loan because you want to get a nice car, you graduated from school, you got a new job, oh, it's time for me, I want to get a new car. Or maybe you want to get a mortgage because it's time to buy a home or have a condo. When it comes time to do those things, the bank's going to take a look at your credit report, look at all sorts of factors. But when it comes time to get a mortgage, they're going to look at your credit report and realize this person only has one credit card. They don't seem to have much experience with managing multiple lines of credit, multiple credit cards, or loans, or mortgages, for example. So they're going to view you as being more risky. That's why you want to have a thick credit file. You want to have many accounts and a long history. I refer to this in our Credit Matters article as the depth and breadth of your credit file. It can be referred to as having a thick file or a thin file. Having a thin file means you might have a very short credit history with a very few number of accounts. Once again, the goal is to make it very clear to potential lenders that you have the ability to pay on time and handle the amount of credit that they've given you. So you having many accounts that stay in good standing with low utilization across many years is the best possible thing. Essentially, taking your credit file, you're taking your credit report being this, to growing it, that is how you grow your credit score. That is how you get towards those 800 to 850 credit scores, those amazing, very difficult to get credit scores that are usually only attainable after years and years and years of hard work, of on-time payments, of extremely low utilization, and keeping your credit report pristine. That's really the key. So in the end, even doing the right thing with one credit card can be a great benefit to you and help to raise your credit score, especially if you're in your early 20s. So if you don't own a credit card right now, you should get one. Let me say that again. Especially if you're a young person, if you're 18, 19, 20, or if you're in your early 20s, or even late 20s, or otherwise, but especially for those young people in their 20s, go get a credit card right now. You may think, oh my gosh, he's rushing me into something. Whoever you bank with, go online, take a look at what different credit cards you have, take a look at the different credit card options that are out there. Credit cards are not evil, no matter what your parents might say or other people might say. And it's time to begin to build your credit going forward. We will do many other videos on, okay, I don't have a credit card. What kind of credit card should I get? Or I already have one. What should I get for my next credit card? Once again, back to the foundation that doing the right thing with your credit cards, keeping a low utilization, making complete and on-time payments is the best thing. And those small actions, which may seem easier said than done, but it's really those small actions over time, that's really what's going to build your credit. And that's what's going to pave the way for your financial future. So we will do videos going forward that are about some of the greatest credit cards you can have in Canada, some of the most prestigious with the most perks, with the best travel rewards, and so on and so forth. Those things that are usually reserved for people with higher credit scores. We're talking 700 and above, or 750 and above, that include the need for having a lot of on-time payments and a long credit history. We're going to talk all about that kind of stuff, but it all starts with very small, simple actions with just one credit card. So if you don't have a credit card right now and you have no idea where to start, if you don't want to wait until the next video, go to creditkarma.ca. The link will be in the description. And get a sense of what your credit score is. Take a look at your report. It's entirely free and it does not impact your credit to view this. They give you tailored recommendations based upon your credit report and score. And especially if you can find one that's through your own bank, just to make it easier for you, go ahead and apply. Thank you so much for listening. Once again, if you like what you saw here, give it a thumbs up. Please subscribe for more. I'll be putting out many more videos as we continue our credit journey together. Bye for now.